All right, guys, this is Paul Singh, the market speculator, with the Bulls on Wall Street weekly swing trade report. What a week it was, and what an upcoming week we have. Let's take a quick look what we're going to talk about today. Market analysis. We're going to talk a little bit about the Fed and inflation numbers, some areas to watch, and Bulls alerts. Areas to watch. It's basically tech versus everything else. Let's start with the market. So we know the big Fed announcement was Wednesday, and then Friday we had the St. Louis Fed chair opening his mouth. And you can see what happened in the market. Fed, so right now, no increase in interest rates, but they indicated, whereas before they had said not till 2024, now they said potentially 2 in 2023. Of course, the market got a little shaky because of that. And then on Friday, the St. Louis Fed chair said maybe even 2022. And that's what spurred the S&P 500 to gap down big under the 50-day moving average. So it is at a key level right now. Now, going back to the pandemic low, think about all that's happened since. We've had a lot of scary stuff happen. And what usually would happen is we get this big pullback, sometimes even violating the 50-day moving average, but then the market comes back strong. So the question now is this a dip buying opportunity? And if it is it here, or do we dip further? So we're going to watch next week. Be very cautious unless SPY can remount the 50-day moving average. We also have a few news events to talk about, to worry about, which we'll talk about in a second. But going into this week, caution. And anytime there's a big Fed announcement, especially the big ones, what usually happens is there's volatility around it, which we're seeing now. And then a week, sometimes even 2 weeks later, the trend develops. So the question here, is it going to be range bound? Is it going to trend down? Or are we going to just come back and trend up like we have almost every time since the pandemic low? So that's what we're watching for. The strategy now is exercising caution. If we look at IWM, also very weak, violating its 50-day moving average after testing highs as SPY broke to highs. And what's interesting here is Qs have held up very well, and which were lagging. Going into the Fed meeting, they were lagging SPY and IWM, but now that higher low we talked about still in place, and we are right at all-time highs. So technology holding up well. NASDAQ is full of more technology type stocks, even though it's not 100%. This gives us a good clue there that technology is the place to be right now. All right, so support and resistance levels, we kind of went over it. We'll just go over it here. Let's go over it with the Qs. 50-day moving average, obviously important. We're above that on the Qs. The all-time high here is important, which we're testing right now. If we were to violate the 50-day moving average, this open gap here becomes important at 322. If we look at SPY here, we have that 50-day moving average, which got violated. If we can remount that level, then we watch this open gap, which corresponds with the 9 EMA. If we blow through here, there is an open gap all the way down here at 390, one here at 396, another one here at 401. These will all be key levels. This low range right here would also be a key level. So these are all levels we should be watching closely if the market dips further. So that's support and resistance levels. Market breadth, not very good right now. If we look at RSP, the big gap down, even gap down further than SPY did. A lot of red stocks. We won't get into it, but a lot of the indicators we look at very weak as well. So market breadth, not great right now. Another reason to exercise caution as swing traders. If you're a day trader, trade like crazy because this volatility is good for that. But as a swing trader, we got to be more cautious. Know that June seasonality is coming up as well. End of June tends to be weak historically, and then July actually gets strong. So we got all these things that are telling us caution, and then also we have historically June seasonality. Now this could change. Maybe we have a great next week, but for now, exercise caution. Now let's talk about the Fed and inflation. We know what happened last week, and obviously Fed is saying that the indications are right now they think inflation, the rise in inflation is temporary, a reaction to what's going on in this odd post pandemic economy that we're in right now. They think it'll reset on its own, but they're still talking about potentially 2 years from now, maybe even just 1 year from now, raising interest rates to stem that. So got to be aware of that. And then next week, Tuesday, Powell is in front of Congress. We have to be aware of that. Treat that as almost like an earnings day for a stock. And then on Friday, we have more inflation-related numbers coming out. So these two things could have a real impact on the market next week. So just know that. And probably a good week because of all these factors. Good week to be cautious. If there's any week to be cautious, this is the week. So I wouldn't add stocks like crazy. If I'm in some positions now, manage them. Maybe take some profits. We took some profits yesterday. We'll talk about that when we get to our alerts here. But definitely time to be cautious. Don't get too aggressive. Now, areas to watch. Tech, basically, versus everything else. And within tech, software and cloud. So let's look at some ETFs here. Here's SPY. And I have filtered out for over the last 2 days, -2. And if we go up here, if we see what was positive, essentially only here and above. So we have XLK, which is technology. We have the Qs. We have oil, barely. Social media, software. So software index very well here. Look at IGV, the ETF. And then we have the cloud IPO here, again, technology. And then we have Sky, which is a cloud ETF. We have cloud here, another cloud ETF, another cloud ETF. Solar's here as well. So these are the areas I would be paying attention to for relative strength. Cloud, software, social media, solars. And then here, these are not things we really need to pay attention to, except for VIX. Fear in the market whenever we see VIX popping. And that's what we saw here, especially on Friday. And then everything else hit really hard. And a lot of the reopen related stuff. And here's our reopen list. Look at all this red just from Friday. But all of these essentially leisure, resorts and casinos, restaurants, airlines, metals. Here's aluminum, all of these industrial metals. Airlines here, also, -3, even though they were positive on Friday, which was a good thing. Over the week, very weak here. Look at, here's Delta, here's UAL. You can see the pullback a little closer. You can see the pullback here. Definitely still watching these areas, but know that they are lagging right now. And technology is strong. So going back to these ETFs, where are they? Right here. We can see this is the area we want to be focused on. Of course, we'll be watching the pullbacks in these areas. Here's retail, here's casinos and resorts, here's leisure, here's energy, financials, which were very strong leading the market. Look at how they've been crushed over the last week and a half. So that gives you a good indication of what's weak, what's strong in terms of overall areas. Normally now we would look at some stocks, but I say right now, just look at these industries. We do have in Bulls on Wall Street, the swing report. We have a list of focus list stocks in technology and software that we're watching closely, and we actually are in a few right now. Let's get to current positions and some trades. I'll go with one loss and one win. The win was a big one. DoorDash here. These, as we saw with that ETF, the IPOs have been strong. We got into DoorDash on the remount of the 50-day moving average. We had indications that this was a bottom, and you can see all the positive volume coming in. We got in around 144, took profits around here at, I think it was around 166, the top of this range. Now, and this ended up being a good risk reward, got good RR on this. I was actually initially looking to take profits higher, but considering the market, we want to be cautious. We grabbed those profits where they were. Now, one small loss was X, and it was less than a normal size loss. Normally, we do 1%. This ended up being around 0.7%. Industrial metals were very strong, and then last week, they all got crushed after the Fed meeting. And you can see here, once it got around the 50-day moving average, we got out for a small loss. So DoorDash and X were two trades from last week. We are in Apple, which is holding up well over the 50-day moving average. We are in Beyond Meat, which is holding that 200-day moving average. And we are in BLI, which is above the 50-day moving average. All of these look really good right now. The weakest one for us right now is energy. It's right around our entry, a little below our entry, actually. and testing the 50-day moving average right now. It has been very strong. Overall pattern is still very strong, but short term, a little bit of a concern here. So that's the weekly swing report. Remember, guys, you can always get more joining. I don't have it up here, but Bulls on Wall Street. Let me pull that up here again. Bulls on Wall Street. Here we go. The part-time swing trader report. Of course, there's other stuff as well. We have a daily report, much like this, but I get more specific into the stocks, alerts, what we're trading, and we also have a fantastic chat room. And also remember, next week, next Saturday, the usual Coffee with Paul, which will be live instead of recorded like this one. All right, guys, have a fantastic weekend.